Hi, I'm Logan Finnerty with the Moneta Group, and this is our new experimental way of bringing you our investment commentary each quarter. So to start, we'll start with summarizing 2016 and more specifically, thoughts from the fourth quarter of 2016. On this slide, we have a summary of performance in 2016. Large US stocks like Apple, Google, Johnson & Johnson were up on average about 12%. Their smaller competitors were up 21%. International stocks trailed, up just 2% for the year. Bonds were up slightly for the year, but really struggled going into year end. I'll discuss that more in a few slides. In many of our client meetings, the big question is the stock market overvalued? We've had a tremendous run since the bottom in March of 2009. And now clients, or at least several clients, are starting to get nervous. The truth is that the valuation of the market supports further growth. The current PE ratio, the price of the market relative to the earnings of the largest 500 companies, is at 16.8 times. Historically, that's a little above average, but a little above average is to be expected with interest rates so low. We're unsure of what a Trump administration will bring, but we are fairly certain there's going to be a large debate around whether we should cut corporate taxes going into 2017. If that happens, it should provide a significant boost to earnings for our domestic companies, which could potentially drive further appreciation in the stock market. We expect there will be a large debate on whether this is good or bad for our federal tax receipts. And in all honesty, we're not sure. But what does give us a little bit of hope is that corporate taxes are only 8% of the total amount of taxes paid. So whether taxes go up or down for corporations domestically, it won't make that much of a difference on federal receipts. When meeting with clients, some have been surprised to see that their bond portfolios have fallen in value. That's because interest rates have doubled since July, a sharp increase in a short period of time. As a reminder, bond prices fall when interest rates go up. Over the next few years, we do expect interest rates to continue to go up at a very gradual pace. We wouldn't be surprised if they went up another % or two throughout 2017. Our final point addresses trade. Global trade has been a tremendous benefit to the world economy over the last 25 years. What this chart shows is that over 1.1 billion people have moved out of extreme poverty in that time period. And as a percent of the population, it's fallen from over 35% to just about 10. While it still concerns us that 10% of the population still lives on less than $2 a day, we have hope that continued growth in the world economy will reduce this number even further in the next 25 years. Those are our very quick thoughts on the market. If you'd like to read more, please click the link below. And if you're interested in talking to us and discussing this further, please follow that link to find my contact information. We wish best of luck to all of investors in 2017. And we'll see you again next quarter.